The Rebel Capitalist Show. How do you take your view and translate that into a view for the dollar, the DXY, against the euro, the yen, etc.?
Well, just as I like to look under the hood within inflation, I also like to do the same with the dollar, because a lot of people say the dollar's up or the dollar's down, dollar's strong. And, to me, you have to really splice up the dollar's behavior against different currencies.
Right.
The dollar strength really has, over the last couple of years, mostly has been against the troubled countries and of Brazil and Argentina and Turkey and Mexico.
Mm-hmm.
You look at it against Canada, the Canadian dollar's been trading between 135, 145 for years. Look at the euro. I mean, the euro has everything against it, with negative interest rates, sclerotic economies, massive debt, troubled banking system because of negative interest rates and no yield curve, political issues, trying to merge all these different countries. And the euro has been trading between 105 and 115, outside of a spike to 125 in 2018, for about 5 years now. Look at the yen. Look what the Bank of Japan has done. Negative interest rates, a balance sheet bigger than the size of GDP. And the yen trades great. The pound got slammed after Brexit, but never really broke 120 and has sort of been in a range for the last couple of years. So I think a lot of that has to do with the dollar still has its own flaws. It's the largest debtor nation in the world, exploding deficits here, which is big strikes against it. So I understand. On the other hand, you have this, people like to call it a dollar shortage, where there's a scramble for dollars from international countries because of whether they need dollars just to transact or they have dollar-denominated debts. But the analysis that's not being done is they also have a lot of dollar-denominated assets as creditors of the U.S. So I think the dollar, again, trades okay against some currencies, trades great against the Chinese Yuan of late, certainly, but doesn't trade that great against the euro with all the issues that the Europeans are facing.
Okay, so if we're just looking at the DXY, your view is it's probably going down, as well as this stagflationary environment. So I've tried to think it through a few times, quite extensively actually, in some of my videos, and I've tried to say, well, can we have this situation where we've got CPI going up, or what they'll admit to, at 5-6% per annum, while at the same time the DXY is going actually up to 110 to 120, which again, people see that it as this monolith. It's only binary, but I don't know, maybe there could be a situation that where we see both, and it kind of blows people's mind. What do you think about that?
Well, the dollar has been, well, the dollar index, the euro heavy dollar index, I like to call it.
Yeah, right.
The dollar has been given every gift from the other countries, the other cross-rate countries, to really spike above 100 and hold it. And we're really no higher than we were 5 years ago. The dollar's essentially just been in a gigantic trading range. So I don't know what more of a gift you can hand the dollar in terms of the flaws in the other currencies to get the dollar to rally from here.
Yeah.
So I'm more inclined that in that type of context, the dollar is more likely to go down than up.
The bulls are going to point to QE, though. The bulls are going to flip it and say the same thing, that the Fed's taking its balance sheet to 7 trillion, and you've got M2 going through the roof, and the dollar's still been able to stay close to 100.
No, that's very true. It's we're all in this same QE soup together. So
yeah,
not like we have outdone the Bank of Japan or the ECB. The Bank of England is essentially now directly monetizing the debt in the UK. So we're all bad actors here, and you're just talking about one crappy fiat currency against another.